Hi, friends. Welcome back to the Wall Street Skinny. I'm Jen.
I'm Kristen.
And we are two lifelong friends, former investment bankers, and teachers here to give you the skinny on how to land and thrive in the world's highest paying jobs. We ask the dumb questions here so you can be smarter in real life. And today, I am so excited for this episode, Kristen. We filmed this before the US election. It could not be more timely. It's so exciting. And I'm not sure what we're going to end up calling this episode when we publish it tomorrow morning, but it's either going to be the future of crypto, crypto for normies, or like crypto for people who just think they want to do finance, because that's what we're going to be talking about today.
I thought there was like a trad wife joke in there, Jen. You at one point had a trad wife joke.
Nope, that was you in the episode making a trad wife joke, but
Never mind.
Trad fi is something we're going to be talking about today. Trad, not trad wife.
Right. But when he said that, that's what it was. He said trad fi, and I'm like, oh, that sounds like trad wife. But
Kristen really seems to want to hear the word trad wife in everything that anyone's saying.
I've just never heard it called trad fi, like traditional finance, trad fi. I mean, I like it.
So
it's just I've never heard it before.
Trad fi is the analog to DeFi, as opposed to, right? So those are two sides of the same Bitcoin, if you will. Oh, I mean, come on, that was brilliant. Okay, so the man that we are going to be sitting down with today was a co-worker of mine at Lehman Brothers. So you guys are going to have to hear his whole story from the time that he was 19 years old, effectively, until now. And you better listen up, because he has, I think, one of the best origin stories for someone who has gone on to be now the founder of what he affectionately, and I think is a great operating term for, what he calls the Goldman Sachs of crypto galaxy. So for those of you who are like, hey, I want to go work in finance, but I think it should be something with crypto, but I'm not like a crypto person. I'm not like on TikTok with like all kinds of meme coins or whatever. Is there a career for me? The answer is yes. And Steve Kurz, our guest today, is going to explain exactly what that career, what that path, and what that world looks like for people like us who we've done a Crypto 101 and kind of even like a Crypto 201 episode with our good friend, Crypto Trader 321, Chris Newhouse. And so that's a great primer on the mechanics of crypto itself. We released that back in the spring when the BlackRock crypto ETF was first being greenlit. But this is more about if you're considering a career in crypto and want to look at it as an alternative to going and working at JP Morgan, what does that look like? We're going to explain how all that works.
Yeah, this is like, I mean, I keep saying this all the time. I just sound like a broken record. I feel like every time I pipe in, I'm like, this was one of the best episodes. But like this was really, really, really fun. And Steve gets into just some really, I think, helpful advice for anyone who is younger in their career, how to essentially begin, get past the imposter syndrome, and how to set yourself up on the best foot. So like I said, I love this episode. And it's just, I feel like we've just been getting some of the most amazing guests recently.
We're really lucky. I think Steve's perspective is one of how to be entrepreneurial within the world of finance. It sounds like something that's hard to do. It's like everyone's already figured it out. You issue equity, you issue bonds. Like what else is there to do? Everyone's already done all the inventing. And that's so not true. So if you take anything else away from this, even if you decide you don't want to go start your own new revolution on how the entire world of finance works, how can you be entrepreneurial in your own life and your own career and take that ownership mindset that I think Steve embodies so well?
I think that there are so many people that do start in finance that want to get the foundation, but then do want to do something entrepreneurial. And so I do think that for anyone who has that entrepreneurial itch, but is looking to break in again, finance, like this is just an amazing story and episode for that. Let's bring them on.
All right, so we have an incredibly special guest on today, Steve Kurz, who is one of the founding partners of Galaxy. And Steve and I know each other from Lehman back in the day. So this is just a really special relationship. We've talked about how careers are long and people that you meet, you should never be an asshole to because you're never going to know when you run into them. I was most likely probably a huge asshole to you, Steve. I have no idea. So you can be very honest about that if you like. But when
it might have been the reverse, by the way, also. I don't remember.
That's something that certainly did not come across my mind. So if you thought you were, you definitely weren't. When we started this podcast and kind of got back into the whole world of Wall Street, your name came up and I was like, wait, he's what? Holy shit. And so like, it's one of these things where you meet people early in your career and you're like, oh, you're like me. Steve is not like me. Okay. Steve has gone on to do utterly amazing things. So Steven, I would love if you could share your story of how you started your career and how you ultimately came to be one of the founding partners of Galaxy and what Galaxy is for our listeners who don't know.
Yeah, of course. And first of all, I disagree. You guys, we're doing our entrepreneurial thing, and turns out that crypto became a little more interesting in the last couple of years. So we're a little bit lucky, and maybe we were in the right place at the right time. But the way I got to Lehman was actually kind of similar to how I got to Galaxy. Like I had no interest in going to Wall Street. I didn't know what Lehman Brothers was. I didn't know Goldman Sachs. I didn't know anything. I was actually in college at Cornell, and I was working for a worm poop company called TerraCend.
Wait.
Literally, we I'm telling you, we took used soda bottles and we filled them with worm shit. I'm not joking. And we sold them to Walmart. That was the company.
What?
That was the company.
I'm dead.
Okay, wait, sorry. Can you just explain like why? Like
yeah,
what?
I need to know more about the worm poop economy.
Well, I mean, first of all, it's great fertilizer. Like as a starting point, let's say we were growing tomatoes in our basement in college. Let's go with that.
Sure.
The bloom
I'm sure that's what it was, tomatoes.
The bloom size on the tomatoes was like 20-30% more with vermicompost, worm shit, than with regular chemical fertilizers. And so like, wait a minute, if that works for tomatoes, why can't it work for, other plants? And so we tested out and we started thinking like, well, if this is an organic product, why can't we package it in organic waste? And why can't it be the first ever triple bottom line company? So it was a sort of socially, environmentally responsible company that could be like a triple bottom line scalable thing, and like Walmart was into it. And so it was a real interesting startup company that I was working for. I'll tell you the punchline in a second, but the day that Lehman came to recruit on campus, by chance, that company and my involvement was on the front page of the Ithaca Journal and the Cornell Daily Sun. So these are the two papers in Ithaca. And like, I'd never been in a paper before. This was like the first time. I felt like all these, I guess, execs came in like, who the hell's this guy who's on the front page of the paper, whatever. So they reached out to me and said, do you want to talk about Lehman Brothers? And I was like, I don't know what that is, but sure, let's have a meeting. So we sat down and they said, like, we understand you don't want to do this, but like, you should come for the summer and like do an internship. And so I said, sure, why not? And then I ended up loving it. Like, you're going to pay me how much to go to New York and be in the action and all that. And so that was kind of the story. The irony is, however many years we are later from Lehman, TerraCycle just did 75 million in revenues last year, and Lehman has been bankrupt for since what you think is safe and what is actually safe are very different.
And sorry, I'm actually just very curious too. Were you studying agriculture or science or? Okay.
No, I had the theme that I had no idea what to do or what was going on was consistent. I took a philosophy class and I took an economics class, and it's like literally the last day your sophomore year you could declare a major. I slid the paper into the door in the economics department to be an econ major. So it was like very I'm studying everything. I love everything. So.
And did you start in Lehman in the fixed income sales and trading division for your summer internship?
No, that's actually, I forgot about this. I started in the international equities division, and I think you remember they have the rotational program when you start. I actually had a handshake to go back to international equity sales. And then when we went through the process as an analyst, and by the way, at the time, I don't know if anyone knows this, but Lehman was the place to go, right? Like, I turned down my McKinsey interview. I turned down my goal. I was like, I'm good. I have a full-time job at Lehman. Yeah. I shook hands with the guy who runs the equity international sales desk. I love international stuff. This is what I'm going to do. So I show up. We go to this rotational program, and I think it was Jim O'Malley. Sorry, who I rotated with, and he was like very focused on getting me to the rates desk. So we ranked them, but I told HR like, this is all a formality. Like, I'm sure I'm going to international equities. And like, I got this piece of paper in an envelope or whatever, and I opened it up, and my heart dropped. I was like, I didn't sign up for this. I didn't sign up to be in the fixed income U.S. rates. Like, what is that all about? It's not international at all. It sucks. So I was like, so that was a surprise. I guess I didn't understand the relative pull in the organization of the rates desk versus the international equity sales desk. So the answer is no. But then obviously, so I got to work with Jen and wake up and print butterfly charts at 5 a.m. and It's great.
Printing. So I was really lucky that I missed the printing torture because that's exclusively a first-year analyst gig. And I started my first year in a joint venture between banking and sales. So you and I both joined the team probably at the same time in 07 because I was somewhere else in 06. But then working with the same people. You mentioned Jim by name, and I loved working for Jim. We've talked about him in previous podcasts, not by name, but like now that you've named him, just like a shout out to Jim. No, it makes me... I've talked about him like indirectly as someone who gave me a ton of opportunity, and I'm so grateful for that. So like now that it's out there, like shout out to Jim.
and since it's out there, Jim and Jen were there was the fast money side and the real money side, and they always seemed just a little bit smarter than us, a little bit like you're just like I don't know, like they're talking about the belly of the curve and like the spread of spreads, and you're like I don't know what that is, like.
Okay, so who were the clients that you were covering predominantly?
Yeah. So I was on the rates desk for a little over a year, which wasn't a long time, but it was a little mix of large banks like Bank of America, BlackRock, huge money manager, some insurance companies. So it was a pretty good mix of real money clients.
So then walk us through, because I remember, and it's funny, I have a photo on my phone, a collection of photos that a former coworker of ours circulated on the 10-year anniversary of Lehman going bankrupt, and they're all saved down. So when I go chronologically through my phone, the earliest photos on there are from September 15th, 2008. Wow. And I have photos of you and like Josh Abramson and Colin McLeod, like all there on the day we went bankrupt. So tell us about, because what happened is it was like basically like a bomb went off and everyone was like scattered to the winds, and the Lehman ties stayed so strong, but I totally lost track of what happened to you. Again, I'm an asshole. So I'm curious like what your journey was through the bankruptcy. Yeah,
well, I mean, so just to restate it, because I think everyone talks about what happened when Lehman went bankrupt, but before Lehman went bankrupt, there were like 8 rounds of layoffs. And so you're a year into what you thought was your dream job. They've kind of like rugged you on what you thought you were going to do. You're doing something else, all good, but then suddenly people just start disappearing, and you're just like, oh, what was that? And don't worry about it. It's all fine. You're an analyst. So I feel like, oh, okay, cool.
You're safe.
Next day, like 4 more people are gone, and you're just like,
including the person who told you were fine.
No, the craziest one was, we could do this for hours, but the craziest one was, can't remember who it was. Somehow was handed the new seating chart. And then was looking through the seating chart and was like, wait a minute. And like, they forgot, like they screwed, and I'm like, oh my God, this is like a bloodbath. I don't know what's going on. So long story short, I actually ended up getting a job offer at Fortress, and the job offer came through on September 11th, 2008. So 4 days before Lehman went bankrupt. And that was also through the same Cornell Lehman network that had started through Garrett Waite. And so I immediately accepted,
Can you describe for our listeners who may not be familiar with Fortress, what Fortress is and what Fortress was in 08? Because when I think about Fortress, it looms so large in my mind, but I'm not sure that it's a household name for a lot of the youngins these days.
Yeah, I mean, so Fortress is, you would call it an alternative asset manager, but it was really the first one to go public, and that was the big thing. And so it was a hedge fund business, a private equity business, and a credit business all smashed into one that chose to roll that up through 3 very, very brilliant, successful people, one of whom is my current boss, which is why I'm saying that. Mike Novogratz, Pete Brigger, and Wes Edens. And so they took the company public. I think Lehman and Goldman did the deal, and then really just kind of dominated all of those different verticals for a number of years. And if you were in any of those areas, you knew who they were. They were the macro franchise under Mike Novogratz. Pete Brigger built an amazing credit business out of the financial crisis that's still, frankly, running very successfully to this day. Wes Edens, who now owns the Bucks and I think Aston Villa and all the railroads in the country, had 5 private equity funds. And so these are just 3 unbelievable guys that came together and set the bar really high for all the other alternative asset managers like Blackstone and everyone that are now public as well and have really taken that model and run with it.
I will also say, of all the clients that I covered in 07 and 08, Fortress was one of the few that had high-ranking female portfolio manager. And I remember that making a big impression on me. And, it may have just been the sample size that I worked with, So it may not have been indicative of the broader industry at the time, but that made a big impression on me, seeing someone who was like, and she was young too. And I was like, holy shit, this woman's like lights out. Yeah.
Well, I mean, so that, to be candid, like some of the negatives at the time were, cutthroat culture, which is common in finance, but the positives were, if you're good, you're good, right? So it was meritocratic in that way. And I agree, actually, it was disproportionately favorable that way. So.
Yeah. And so what role did you start out in Fortress?
So I literally walked. I accepted the job on September 11th. I'm actually I don't know if you know this. I'm the guy in the video, the Lehman video. Whenever there's a special on TV, it's me walking out with my bag. Sunday
that's
night.
Amazing!
Literally, I have the video from my friend at CNN, and it's
we're gonna play it.
Can you
please send it to us because we'll play it with this episode.
Yeah, I'd love to give it more play for sure. No, I will send it to you. The funny part of that story was my grandma saw me on TV, and she sent an email to my extended family like, "Be nice to Steve, he was fired," but she didn't copy me on it, and like so all my cousins and stuff were like, "Are you okay?" And I'm like, I'm literally standing. I got a job offer at Barclays, and I took this job. I'm good. Like I'm fine. I'm okay. Don't worry, Grandma.
Oh my God.
That was kind of the drama. But no, I jumped to Fortress, and at the time, Fortress was a $30 billion asset manager. They grew to be many multiples of that. My first role was really a strategy role. It was sort of like how do we think about the client franchise and take three disparate groups and make them into an asset management platform that can be 100 billion or 200 billion of AUM. And just as we started to build that plan, the bottom fell out for Fortress and the stock went down to 97 cents. And I'm like, oh my gosh, the layoffs. And I've seen this before. And it kind of had me questioning everything. Back to the TerraCycle point, like why this was the thing that was supposed to be stable. And if you do a good job, you make a lot of money. And like the whole thing just got obliterated.
Why did I get out of worm poop? Like
why did I get out of worm poop? There's always a market for worm poop.
There's always money in the banana stand, Michael.
Yeah. Yeah. So it was 5 years. It was a good stint at Fortress. I moved from a strategy role to a product specialist role, which, by the way, at the time wasn't really a thing. Now all the platforms have product specialists. It happened by accident. Some of the salespeople were talking about the portfolio as the market was way down, and they were like, maybe they were talking about rates the wrong way, and I kind of corrected them because that was my personality, and they were like, who's this young guy? Who does he think he is? But at the end of the day, it was like, no, I'll sit with the traders in our markets meetings and be kind of a go-between between the portfolio management and trading teams and the allocator clients that need to know what's going on in the portfolio, our view on rates, our view on the macro economy. And so that was a pretty cool experience. I got to go to Asia. I got to go to London. I got to work in commodities and macro and really a lot of different underlying asset classes. Yeah, for 5 years. So it was good.
And it was all what we call TradFi. So this is all the bread and butter of,
not to be confused with trad wife, but
TradFi.
Totally.
So, and to be clear, that's not a term that I use, but I want to use it here to explain the very kind of bifurcated layers of your career and your history. That this is all the bread and butter stuff that we grew up with, and crypto was not something that was on pretty much anyone's radar at this time. There was a select handful of people who knew about it, but it would be like some closet conspiracy theory effectively now, like by comparison to.
Yeah, totally. I mean, I actually heard of Bitcoin for the first time in 2013, but but to be fair, I was very negative on it. And I left Fortress to go to River Birch, which was a firm started by a bunch of Lehman people, Bart McDade, Alex Kirk, a whole group of Lehman credit folks, and we were building a traditional hedge fund, a credit long short hedge fund. And I remember someone talking about Bitcoin in 2013, and I was like, that's stupid. There's no cash flows. Just totally dismissed it.
What do we discount? I need a net present value.
100%. And obviously 4 years later, I committed my entire life to Bitcoin basically. So it's very funny how that worked out, but spent 5 years then at a credit shop before sort of saying like, I can't do traditional finance anymore. There's too much changing too quickly. And that got me started down the path towards technology and then crypto eventually.
So can I ask a quick question? You clearly impressed Mike Novogratz enough. I'm assuming while you were at Fortress, like how did that happen? Just like, how did you get on his radar?
The thing with
we have an explicit rating, by the way, so you feel comfortable speaking freely.
No, I feel totally comfortable speaking about it. It's what happened. First of all, one of the reasons I ended up working at River Birch is because when I started at Lehman Brothers, I walked into Bart McDade's office and introduced myself. Bart McDade was running global.
Did you really, as an analyst?
As an intern.
Oh my!
But
everyone listening, learn from Steve. Like I never walked into Bart McDade's office and introduced myself.
I'll get there with the Mike point, but my point is as an intern on the equity desk. He had the biggest office. I was like, yeah, I should go introduce myself. That was just what I thought. So I did it. Look, knowing what I know now, 99 out of 100 people would have been like, get out of my office or some version of that. Bart spent an hour with me, and that was very, and like that told me, I mean, I over-indexed to that and was very positive on everything when I shouldn't have been, but the time that he spent was very memorable. So I took the same approach with Mike when I got to Fortress. The problem was I was at a hedge fund and I was wearing a suit that was not what a hedge fund guy should look like. I wore my Lehman suit.
Oh my God,
so
Mike, no, tell this story because please, this is yes.
Mike's like, he dismissed me. He's like, he didn't say it. I just know the way he looked at me when I was introduced to him, I knew I had failed. Like he's like, that guy's not going to work here to here. I just knew it.
Oh my God, wait, was it that you were like too dorky or that your suit wasn't expensive enough or like what was it?
I mean, the Lehman style was like, not like, it just wasn't the cut that a hedge fund,
it was the cut of the suit. Okay.
Yeah.
It was like, it wasn't European.
I would say it was a little boxier. It wasn't as fitted. Like it just wasn't right. It was like, bond salesman versus a guy that represents me. Different thing.
Also, I do think like when our new Barclays overlords came in, there was definitely a change in the pockets of the pants. But I just think this is so interesting because we literally recorded an episode with the CEO of a fashion company the other day. Oh, wow. We were talking about the menswear. We were talking about how it's portrayed in the HBO show Industry Today too, as well. And it's like with guys, like, you have a suit and like, but like. It matters so much, and this is so lost on me. So that's really.
So anyway, so that was the beginning, and I was like, wow, I totally screwed it up. Exact opposite in terms of the Bart one was a 10 out of 10. That was a 0 out of 10 first experience. I think I redeemed myself in the 2010 World Cup because I love soccer when we had a business formal setting at Fortress, so you had to wear a suit and tie, and I started showing up in like colorful jerseys every day, and like and it was like kind of funny at first, but then it was like, hey, dude, you can't do that from like people will be nameless, but people who ran the divisions I was in, right? But Mike loved that I didn't care. And so the guy was like, if you come tomorrow in a jersey, not in a suit, you're fired. So I showed up the next day in a bright yellow Brazil jersey. And so the guy went to Mike, and Mike was like, I love it. That's great.
I mean, sorry, this needs like an exclamation mark times 1,000. Like the clothes you wear, like potentially hurting you and then also making you stand out,
making your own fucking career. Oh my God.
This is amazing.
But it wasn't a master plan. But like, to be clear, like if I'm giving advice, I'm not sure I would give the advice to do what I do.
Because I took a huge risk.
I took a huge risk. The reality is, after seeing what I'd seen in finance and having not wanted to go into finance to begin with, I always felt like if someone fired me, I was kind of like, whatever, like that's fine. No big deal. Yeah. And so I, for some reason, having that approach gave me a little bit more of like a fuck it attitude than probably was like safe. But that probably also really helped me early in my career break through some of, the barriers, whether it's title or position, because you're, the signaling of that is like a real thing. And then you're either going to be dismissed or you're going to be embraced. And so, pick your side. And I was just either personality wise or because of what had just happened, willing to just kind of do that.
I think we could write an entire PhD thesis on what you just said and unpacking that. We have this companion podcast about industry, and there's a line in it about like, this is why you don't give the job to people who need it, as a derogatory thing being said by kind of the people deeply entrenched in the system. But there is something regardless, I know nothing about like your family's background, like whether you or not you had a safety net to fall back on or whatever it was.
I did not.
You intellectually and emotionally didn't need the job to prove to yourself who you were. You were like, I can go be an entrepreneur. I can go do this, right? Like finance isn't my number one passion. Take me or leave me. And it was that, not the needing it financially, but the needing it emotionally to be the validation of who you are and what your skills were that you didn't have. And I think people sense that confidence. Yeah. And they're like, that's the person I want on my team.
Yeah, I think that's right. Look, I want to be also a little vulnerable on the other side of that. Like that, and first of all, there was no safety net at all. And by the way, one of the lessons from Lehman, my boss was having his 25-year celebration at Lehman, and we went to the 32nd floor, or the 20, I can't remember the exact. Yeah. And Joe Gregory saw me and put his arm around me and sort of said, have you had a bonus at Lehman? I said, yeah, I've had one bonus. He's like, I'm going to give you a little bit of advice. You should put it all in Lehman stock. And I don't think he did that in a nefarious way.
No, not at all. Oh, no. That was the company culture.
Did it because he believed it. But to your point about background, like that 50,000 or whatever my bonus, like I had college debt. You know, like I may never see another bonus. A bonus is a privilege, right? Like I may never see that again. So my mindset was very much not, I don't need money, or I don't care about money, or I have something to fall back on. And by the way, I also have throughout my career coming to New York, I didn't grow up in New York. I didn't grow up in, a huge city like this. I have had, and I think a lot of people in my seats or seats like mine have had imposter syndrome. Like, why am I here? Like, there's a lot smarter people, right? There's a lot better people. So it's not like this confidence thing is just, it's a really weird balance, and everyone has a different internal dialogue, but you just have to make sure that you calibrate properly between the two things, which I didn't do perfectly early in my career because, I could have easily gone off the rails, but you fine tune that. And then you get to a really good place after, I don't know, 20 years, however old I am.
What an amazing story. Okay, so then you exited this wildly profitable credit hedge fund, by the way.
Yes.
And walked away from it all. Why and how and what did you do?
So I was 5 years into River Birch. We had just had a good year. And the reason I left River Birch was I had been thinking, what I really thought was there's only so much, like money's money, and there's only so much that you can learn sitting in, and this is not a knock on River Birch or any hedge fund, but like there's a box. And when you learn about the box, you can at least see like, these are my next 3 steps. And those may be great, but that's all there is in this box. Mm-hmm. This is what it is, right? And I felt like as I processed the global financial crisis, I think our generation felt this idea that like something about this system isn't what everyone promised me or us. Like it just, like something was off. And I couldn't put I was like, is GDP the wrong metric? Are we measuring the wrong things? Now we have QE forever. Like it just didn't make sense to me. And I was like, I can't sit around and just wait for the system to do what it does to people or to me specifically, because that's not worth the money that I would make. So I joined a couple of like tech angel investment groups. I started making some angel investments just to learn about other tech verticals. I've invested in a couple, maybe a dozen or so companies. And honestly, I looked at all those CEOs and I was like, I think I can do that. There's no reason that I can't. So I decided to go start a virtual reality company is the punchline. I resigned. And then one of the reasons my wife is amazing is that she was willing to quit her job at Blackstone and follow me to the West Coast to start a tech company and then follow me back to New York to help start Galaxy less than a year later. So we can get into that. But that was the thinking behind it.
Sorry, really quickly, how did you meet your wife?
She's going to hate me. I was interviewing her for a job at Fortress, actually.
No way.
We also worked at Lehman Brothers, by the way. She was on the banking side.
But wait, so I do want to just harp on this. So she was in investment banking. I assume she was at Blackstone in private equity. Is that?
So she went from Lehman, Barclays to Fortress. So she got the job after the interview. She got the job. So we worked together for a while, and then she went to Blackstone actually on the hedge fund side on the client team. Yeah.
Okay, so you're off in California, part of like the burgeoning tech empire. You said you were there for less than a year. What the hell happened?
Well, Mike Novogratz, who I'd worked with at Fortress, called me and said like I was directionally correct about leaving finance and going into tech, but I was way too far in the clouds with virtual reality and I should calibrate back to crypto and Bitcoin. So it's because I learned about Bitcoin and crypto. I had started the company with one of my closest friends. We had a handshake. We went to Vietnam for a month, talked about the company. And our first thing was, we will be friends no matter what happens. We signed it and everything. And so I think we didn't expect that moment to come so quickly. It was really difficult. We had an immersive software company that was focused on institutional use cases, did some really cool projects. But 3 months into learning about crypto and talking to Mike, I just remember, this one night staring at our ceiling in LA and just saying like, we got to go back to New York. And Fiona was like, what?
We have to go back. It's like that lost moment. Like,
yeah,
we have to go back.
We got to go back. And she's like, you're crazy. Like we just left. Like we literally sold everything. We left New York. And so this was a week after our housewarming party in LA. We bought a dog. Like we got a car, like we were living.
A car. Oh, that's devastating.
So devastating. And then the next Monday I was in New York and I was sort of commuting to New York from LA from then on until we moved back to New York.
Oh. So, okay, explain to us kind of the genesis of Galaxy and what gap in the traditional financial services industry you rose up to kind of fill for the crypto world.
I mean, it sounds great in retrospect because we were right about crypto, but at the time, like it was very, and this is where Mike deserves a ton of credit. So first of all, Mike had a Bitcoin position in 2012, an Ethereum position in 2015. So he was a very early adopter in crypto and had, made a lot of money, just basically buying and watching crypto go up. And so by 2017, I thought we were going to start a crypto hedge fund. So I thought we were going to, pool his assets and bring some investors in and, have a nice existence. 2 and 20 would be great. And so when I got to Galaxy, we thought we were going to launch like the next week or something. And this was probably 5 or 6 of us. And I was like, okay, can I see the investor list? Can I see the docs, whatever? And I looked at everything. I was like, we're not launching in a week. Like there's no like, sorry guys, you're not ready. So we took a step back from that, but the market had kind of gone bananas into 2017. And there was this weird, unusual opportunity to list a company, an early stage company in Canada. And so Mike came into the office one day and said, guys, we're not doing a hedge fund anymore. We're going to be the Goldman Sachs of crypto. And we were all like, what are you talking about? He's like, just trust me on this. This space needs an institutional player. We have the traditional people. We can hire the people under us to do it the right way. There's a buy side. There's a sell side to this. We can go public in Canada at a very early stage in our life. We can raise permanent capital and give us some time to build this company out. And so literally we did that. We went on the road. We raised $250 million of permanent capital. I remember writing the deck out, like the Goldman Sachs of crypto. And, we didn't have any businesses, but here's what it'll look like and here's why you should do it. And so we were able to take that idea and make it a real thing in Canada. So we were listed on the TSX Venture Exchange in 2018, which, by the way, the crypto market was going down 80+% at the time that we were going public. So that was fascinating. My wife had joined as the head of investor relations to lead the go public transaction. So that was an interesting side story.
I fucking love your wife, by the way. Like, she is such a gangster. She's just like, oh yeah, I'll just do this. And like, Steve's off doing his own thing. He'll figure it out. Like, but
she was an ECM banker and we made it public and we needed a 2/3 vote in the midst of the crash to actually have the deal go through. And I think she got like 66.8% of the votes or something. And we wouldn't be here if it happened. So it was one of those early stories that's amazing. But then on the other side of the transaction, you've got a lot of capital and a market that just went totally nuclear to the negative. On the one hand, we thought maybe crypto's done forever, but then we thought probably not. And we have this war chest to now go build into a bear market. And like one of the main lessons that everyone says that's so true is building in the bear market is when you can really change things for your company or for yourself. And we did that. So that was kind of the formative period of time for the company, that sort of 2-year stretch following the very first major sell-off that we experienced.
Wait, sorry. So 2 quick questions. First, what was the rationale for going public and getting listed in Canada versus the US? And second, what year was this? Just like to put it in kind of the historical context of like where crypto's been. Was this like the fall of FTX? What was going on at the time in the background?
We can get to FTX. This was in the fall, winter of 2017 into 2018. Coin had been running throughout 2017, and I think it hit 21,000 in December of 2017. And it was in that sort of frenzy that there was both a mechanism through the TSX Venture Exchange and sort of the excitement to do something slightly irrational, which is to back an early stage company with that much capital. To answer your question on the US, I think even today, it's almost impossible to go public in the US as a crypto company. At the time, there was bizarrely a window where it could happen. That's how Coinbase got public, but we needed to have 2 years of audited financials and we just didn't have any business. It was all Mike's family office that had been doing the prior activities. So we needed to build a 2-year track record effectively as a public company. And by the time we had that 2-year track record in Canada, the window in the US, because of the regulatory stuff that we can talk about, had closed. But we're back on the other side of that very publicly and actively looking to go public on the NASDAQ as a US company. And hopefully that happens soon.
Yeah, no, it just was surprising because in terms of regulation, I always think of Canada as being stricter, but then it sounds like in this one area, it was not the case. So that's very interesting. So thank you.
Well, yeah, no, that's true generally. And I think what happened here is, so there's the TSX, which is the big board in Canada, and then there's the Venture Exchange. And that was created, I believe, for mining companies. And Canada has obviously a very active mining space. And so I think it was, some enterprising bankers that sort of pushed on that and saw it as an opportunity for crypto and captured the moment. ETFs in Canada in crypto we're way ahead as well. So we've got over $1 billion of AUM in our asset management business in Canadian ETFs, which were years ahead of the US in that as well.
Oh, that's so interesting. Thank you.
Yeah.
Okay, so the Goldman Sachs of crypto, what do you do? Like, what are your business verticals, and how can you translate those into their analogs in the Goldman Sachs, Morgan Stanley, JP Morgan of the TradFi world?
Yeah, and look, it's interesting. The crypto ethos would say that Galaxy shouldn't exist because the whole point of crypto is peer-to-peer, trustless systems. Why do you need a centralized intermediary to help us with a decentralized revolution? And like that's not lost on us. But I think if you compare crypto to the internet or whatever adoption story you want to use, my view has always been to get to that same end state, we're going to have to meet the world on the 1 yard line. In other words, crypto wrapped in TradFi products, and then take it all the way down the field the other direction to decentralized products, decentralized wrappers. And it has to be that way. And that's going to take many years, and it's going to be a labor of love. And like maybe it feels philosophically bad to do that, but like I don't actually agree with that. I think that it's worth it because I believe in the technology, and I think it's a good path to getting there. So we have 3 businesses. We've got an asset management business, markets business, and then an infrastructure business. And then we have a balance sheet underneath of that. So the asset management business is very similar to other asset managers. We have 5 billion of AUM. We're regulated. We have ETFs. We have alternatives products. We ran the FTX wind down. Like we can unpack that, but it's an institutional grade asset manager.
And is it for retail clients or just institutional investors?
Yeah, so it's on the alternative side of the business. It's all institutional investors, and then on the ETF side, obviously, we have partnerships. So it's the Invesco Galaxy ETF in the U.S. We just launched 3 State Street Galaxy SPDR Galaxy ETFs. We've got an Itaú Galaxy Bitcoin ETF in Brazil, CI in Canada, DWS in Europe. So we pick category winners as issuer partners, and we sub-advise, and obviously we access retail, but it's through those partnerships.
Through the ETFs. Got it.
Exactly. But that's a buy side business, and that's an adoption story, and that's a labor of love, and it's a long build, right, to do that. The markets business is like the sell side business that we had at Lehman Brothers, right? It's got there's a derivatives piece, a lending piece, spot crypto. We're building Prime. Like it all sounds very analogous to what you would see at a bank, and that's a lot of our competitors. You mentioned FTX. Blew themselves up because they didn't have risk management. They didn't have sounds familiar, right? Like everything was interconnected, and we fortunately did, and so we've been able to capture market share on the other side of FTX and really consolidate our position over the last few years in that business. Global business 24/7 because crypto's 24/7. So that's a lot.
That's just like the bond market. You're used to that.
It's just like the bond market. It's just like the bond market. Let's go with that.
No, I know it's not. But I just to get down to the nitty gritty, we've done a Crypto 101 episode.
Oh, cool. Nice.
That was a 2-parter, and we've spoken about crypto, which I think is hilarious, because we are the least qualified people to speak about crypto. I understand 30% of the episode that we put out. So I'm still very much
that's the problem. That is the problem. We shouldn't be talking about what is crypto in this big, heady, everything is everything sense. At the end of the day, we just talked about the financial crisis, right? This is about trust or lack of trust in the system. With crypto, it can be very similar to anything in the traditional world. It just has an intermediary that's based on math and computer science, as opposed to an intermediary that's based on a central banker or a bank or whatever. So crypto could be your healthcare records stored securely on a blockchain in the future that are tokenized, and your token sits in your wallet, and wherever you go, you don't have to have 75 versions of those forms they give you at every single place. And if you never go back there, how do you get it? And maybe they fax you things. It's wildly inefficient. That can live with you in a way that is not just like a digital copycat. The actual record can live. That's crypto, right?
I love that. That makes total sense to me. But so if in the traditional world we've got bonds trading hands, and then we've got derivatives based on the hypothetical cash flows of those bonds, and then we have derivatives and options based on those derivatives, right? What are we doing in the crypto markets? It's clearly not just spot crypto exchanges, right? Clearly there's so much more in these kind of layer 2 economies. What are the products?
Yeah, well, that's a should be a simple answer, but it's not a simple answer. In the securities market for crypto, which is the traditional finance wrapped ETF world, we just got the approval of Bitcoin options. So if you have a bunch of Bitcoin ETFs and now you have options that are approved, and that will, for a variety of reasons, that's way more efficient because you can post your ETF shares as collateral. And so the margin stuff is just much better. And so
much cleaner.
that's going to bring more institutional players because they can get Bitcoin exposure via an ETF. They can hedge or utilize futures and options now in a regulated capacity, even though it's not technically on the underlying. The underlying is the ETF, but that's okay because it's kind of the same. So whatever.
And then you don't have the basis risk too.
And then you don't have the basis. I mean, the basis is also an opportunity if you're a hedge fund in crypto, but yes, totally agree.
What is the basis risk? Sorry, Jen. As the non-person who's like the sales and trading person, what does that mean, basis risk? Just
any basis is the difference between one thing and another, right? So for example, if you're posting US dollar collateral for a Bitcoin position, you have the risk between the relationship between Bitcoin and US dollar. So basis is one of those words that has 10 different meanings. There are basis traders who it's a totally different thing, but it's the basis is just like the difference.
And by the way, there's also there's the spot futures basis. There's theoretically the basis between the ETFs and the underlying Bitcoin. It's sort of a catch-all term, and it's actually hard to know. But to answer your question differently, in the underlying spot crypto market, so not in the ETF market, where our trading desk is very active, there is a healthy derivatives and lending market as well. Some crypto hedge funds want to take a view via an options ladder. Some people want to hedge risk. Like there's Bitcoin miners that make revenues in Bitcoin that want to hedge against their future production. And so the options market in the underlying Bitcoin world, while obviously less liquid than the securities world, it functions the same way.
Got it.
So from that perspective, it's really consistent. And then if you move to DeFi, which is an entirely different thing, which is this like little to the world, but very important to crypto sandbox where everyone's playing around with what the future of the global financial system may look like. You have all kinds of, swaps and index products and stuff, but it's a very, very small market. It's not regulated yet. And that's not a big part of what we do yet because we're a public company and we're regulated, but we are working on ways to make that possible. We need on-chain AML KYC. We need better UI UX. That'll happen. It's just not there yet.
Sorry,
and
really
all
quickly,
of the abbreviations you just threw out: anti-money laundering, know your client, user interface, and user experience. Just for everyone who needs it. I have to go through that every time in my mind too. Sorry.
Apologies.
Kristen, you had a question.
Yeah, no, I was just curious. Was the reason for wanting to go public? I actually just want to go back to this for a second because to your point, like when you are public, now you do have all these extra like regulations. Like you do have whatever the filing requirements. It's more expensive. Blah blah blah. Was the rationale kind of similar to what I know FTX was trying to do, which is like almost to be regulated so that you now in this sort of sea of like sketchy people, you are legit? Was that like one of the rationales for it? Or I'm just curious because like nowadays I feel like everyone's like, I'm not going public. Like we're going to stay private forever. So just curious if that was part of your calculus with that.
It was definitely part of the calculus. I think absent like a legislative framework that regulated crypto in the US, self-regulation and doing things that showed that you were a good actor was very important. So Mike, our founder, tongue-in-cheek at the time would say, like, you have to pay your taxes on crypto. I pay my taxes on crypto. I'm too rich to go to jail, and it's the right thing to do. I mean, that's literally what he would say. And that was cheeky, but like the point for the institutional business behind it was very much, we know how to run an asset manager the right way. Just because the regulations aren't there doesn't mean that we're not going to run it the right way. Why not put ourselves to that standard that will help our mission for this? And it's definitely chicken and egg. If you don't have market participants like Galaxy doing that, you will never have an institutional market. Is it the easy way to do it? No. Is there a moat that you build for yourself as you do it? Yeah. And is it the right thing to do to bring forward the responsible adoption of crypto? Yes. So that made sense to us. And raising permanent capital was for sure an advantage because you don't know when institutional adoption is coming at that time. It's still cloudy how institutional adoption of crypto is going to happen. The ability to capitalize yourself that way gives you a lot of runway, and it's a competitive advantage. You can buy companies, you can roll them into your company, like you have a currency. There's a lot of advantages to do it this way.
Yeah, that makes complete sense.
Yeah.
Okay, so we got through 2 of the 3 legs of the stool.
Yes.
So we had asset management, markets, and then I've already forgotten the third, full disclosure.
Yeah, no, the third is an infrastructure business, which is to the first point I was making is kind of a future proofing of our business. So if we do everything right and crypto becomes permissionless and this peer-to-peer system and there's 24/7 tokenized markets and all of those things in 5 or 10 years, it's true that our sort of legacy TradFi crypto businesses will be kind of worked out of a job. And so to bolster against that, we have a series of crypto native businesses, which include our Bitcoin mining business. We have a custody and tokenization technology business. We have a blockchain infrastructure business that validates nodes and does all kinds of funky things.
It's like your prime brokerage leg.
Yeah, it's right. And then then we're working on DeFi. And so it's kind of like R&D plus some real business lines that are much more embedded in the on-chain economy and what crypto is today, as opposed to where the institutional adoption is going. We expect those to grow as crypto grows, and those will ultimately take over our businesses, and we'll hopefully have stuck the landing on that.
Okay, so I'm really curious, as so many of our listeners are either first career or people looking to make big career transitions. What do you see as kind of the career path within the galaxy? And I like to say galaxies of the world is a little bit misleading, because like you are a pioneer in the space versus, but if somebody's thinking about pursuing a career in finance, generally speaking, I think they think, oh, Goldman Sachs, JP Morgan, Morgan Stanley, I'm going to go to one of these banks. And it's like, wait a minute, there's now the crypto world. And then you've got something like Galaxy.
Yeah.
And, from what we've seen and in talking to people, there are even more senior than we, people who exited TradFi and have become kind of crypto pundits, and they're the old school experts, right?
Yeah.
Then we've got this middle generation of thought leaders like you who are running these businesses your skincare is fabulous, by the way. You still look 22 years old, but at a relatively young age, right? Yeah. And then you've got people coming up into the system who can now bypass that TradFi world and go directly into crypto and get up the curve very, very fast. What does that career path and recruiting look like within, say, a Galaxy?
Well, yeah. Well, before, maybe I should take a step back, because what we were doing 7 years ago was a little bit throwing darts at the wall in the dark. It was, we were we could see some of the potential use cases, and it kind of made sense. But if you just start with cross-border payments right now, if you're thinking about the first job of your career and the upside potential, where you are in the moment in time for a given technology or theme or whatever is very important to understand. And for crypto, this moment, I really, you could tell me I'm drinking our Kool-Aid, but I really feel strongly that is not the case. We look at something like stable coins, and a stable coin is just a token that wraps US dollars, for lack of a better word. Very, very straightforward. It's dollars are allowed to transfer on-chain digital rails through something called a stablecoin. The stablecoin market is now $172 billion of collective market cap, it's sizable, but it's a drop in the bucket compared to the traditional world. If you want to send money internationally, it usually costs $44 to do a wire transfer, US dollars.
Oh, we know.
Right. A stablecoin can do it instantaneously for 1 cent. So when you talk about and there are 190 trillion annually of cross-border payments. And so and this isn't, by the way, this is not we're waiting for regulation. We are waiting for some regulations, but there are companies out there that we've invested in. There's a company called Layer 2. There's a company called Yellow Card in Africa. The growth of these companies in real institutional cross-border businesses, where they have a fintech front end with a stablecoin back end to allow for these payments to happen in hours, not days, at fractions of the cost, is booming. It's unbelievable what's happening right now, and it's only going in one direction. So I guess what I'm saying is, if you're thinking about financial services as a future, you have to understand that financial services is being disintermediated and disrupted. That doesn't mean that large banks won't be a part of this. I suspect stablecoin legislation in the U.S. is coming in the next 6 months. I'm sure the banks will be angling to have a big piece of that, and will be buying some of the incumbent players. My point is, don't assume that the ways that banks have made money, is going to look anything like the way that they will have to be positioned to make money in the future, which directly affects you, your comp, your trajectory, et cetera. And so I think crypto is very de-risked from that perspective. You've got both Republicans and Democrats that are now very constructive on the space. No matter who wins the election, we are getting market structure legislation. We're getting stablecoin legislation. That will be the thing that finally, it wasn't the ETFs, it wasn't the court cases the SEC lost, it wasn't Bitcoin surviving. The US regulatory move, which will happen in 2025, is the thing that really, from a career perspective, tells you this space will be here in 5, 6, 7 years. And from that perspective, it's very hard to argue that you shouldn't take a look, because you can learn everything that you were going to learn in traditional finance in crypto, and you can learn crypto and you can see the disruption. So what is the risk? It all fails. You still learned a ton, and you can pivot into something else from there. That's my windup. For Galaxy as a recruiting sort of framework, we have an intern program. I'm shocked and humbled by the quality of people that we have applying. Some of our best business builders are very, very young. We have a very different idea of what, it means to have a career trajectory than a traditional financial firm. That doesn't mean that you show up and suddenly you're the boss of everyone, but it does mean that, that this is a generational shift, and we understand that some of the leaders, the true tech leaders, forget thought leadership, like the people that are actually doing the hard work and who understand this and who are driving things forward are younger than us. And I say that as a not old guy, but a not young guy. Right? And so I think just the open-mindedness from our team, we've invested in hundreds of companies. We also invest in people. So we're very open to anyone who wants to reach out and talk to us.
It is so interesting. I do think, if you just think about the shift in perception, it takes so long for people to change their minds. And it's been very clear that certain things like gay marriage, Obama wasn't even for it in 2008. Now it's just of course, everyone is for it. Marijuana seems to be another one where it was it used to be this taboo thing. Now it's legalized everywhere. I feel like crypto, it's similar, just the perception. The one caveat is just nobody understands it. But I do think that there is this huge shift of it becoming much more legitimized, especially and I don't know if this is maybe just my interpretation, because when the ETF, was it BlackRock that did the ETF? When the ETF came is around the time I started learning about it. So it might just be I'm a narcissist and I understand it. And I'm everyone understands it now. But I do think that there has been such a clear shift. And as you pointed out, because I did want to ask about that is there any worry about who wins the election? But it sounds like the perception is that regardless of what happens, it's likely going to be positive for
it's hard. There's a lot you said there that I think is important. I think the key thing, if there's one thing to know about this space, is that it's generational and it's global. And so people who are of an older generation are uniquely incapable of understanding crypto, because when you are the system, it's very hard to think outside of the system. I have empathy for that, and I've watched it, and I've seen many people go through the the 2013 Steve seeing Bitcoin, the 2017 and the now. And so I get it, but look, the GDP growth of Africa over the next decades is going to be shocking to everyone. Stablecoin usage, stablecoin legislation is taking off in Africa. It has the youngest population in the world. Go ask anyone who's under 40 what they think about Bitcoin or Ethereum, and tell me how many out of 10 hate it. Some may be neutral or whatever, but how many hate it? Remember 7 years ago, you would have had there are CIOs of endowments that are my age now, right? And they're in charge of making allocation decisions, and they have none of the problems that their predecessors who were 70, 75 years old had with crypto. So it is a mindset shift. And I think a lot of that is just being taken care of from the perspective of people moving into seats that have control over capital allocation decisions. The ETF was a seismically important thing, not just because it's BlackRock, but because Larry Fink is part of the Democrat establishment, and you had this Republican-Democrat football around crypto out of the House Financial Services Committee. That's largely shifted, and what we saw this summer was this very obscure accounting bulletin. I won't give you the details of it, except to say Republicans and Democrats voted openly against Biden on crypto. He ended up vetoing the bill anyway, but you had a majority of both parties in the House and in the Senate going against the sitting president. That is where the politics actually is. And when you talk to the Harris teams and you talk to the Trump team, for sure, Trump gave a Bitcoin speech. That is obvious. But Harris has made very clear, both in private and in public, and many of the Democratic senators, from Schumer to Maxine Waters to Cory Booker, Hakeem Jeffries, the list goes on, are not only neutral on crypto, they're positive on crypto. They view this as, the United States has led in the capital market sense globally. The dollar has led globally. We shouldn't be afraid of this. We should build the rails. They should be built in the U.S., to use a manufacturing sort of truism, and U.S. dollar should be expressed through those digital rails as well. Why would we not allow the U.S. dollar to be expressed globally via stablecoins? It's a crazy position to have.
Yeah. So you mentioned Africa, and I read an article a couple of years ago, or maybe it was last year, that projecting that by 2050, over 25% of the world's population will be African because of the explosion in population, the young population there. We recently did an episode with Mary Ellen Iskandarian, who is the president of Women's World Banking. Do you know her?
I don't know her personally.
She's ex-Lehman.
Oh, really? Oh, cool.
Yeah.
The Lehman diaspora is so
Lehman.
strong. It's unbelievable.
I know. One of the things that we learned from her is about how the digital payment system has been, and obviously it's, fraught with complexity, but how it's been a means of empowerment for women, especially who haven't had access to financial inclusion in countries all over the world. She was talking about, and this isn't something that Women's World Banking is involved in, but she was talking about how, these underground schools in Afghanistan trying to provide education to women, they're being funded by digital payments. They're being funded by crypto. Yeah. And so it's one of these things that, as a layperson who is not a crypto expert by any means, but it's something that I think we struggle with a little bit, is like you hear about all the good that crypto can do by facilitating these kind of things, by bringing access to people all over the world who otherwise wouldn't have financial inclusion, right? But then there's the other side to it of the lack of regulation, the lack of controls, where you're like, well, crypto, can be linked to XYZ sources of terrorism, corruption, et cetera, et cetera.
Yeah.
Talking about it being built and legitimized in the US, and it's very clear that you have a very constructive path towards that. But how do you navigate that problematic perception? And you have, incidents like FTX and things like that. How do you navigate that balance?
Yeah, it's a big question. I'll start by saying that crypto as an industry has not been perfect. And one of my big disappointments coming out of the last, we've now had 2 bull and bear cycles at Galaxy. And one of my big disappointments has been, to your point, when we look around, you have Coinbase, you have Galaxy, you have Circle, like there aren't 20 of us, and I genuinely wish that there were. And I think, attributing that to malice entirely is incorrect. A lot of it was like 2008 style implosion on the inside of the crypto markets. Impossible to ignore how devastating FTX was 2 years ago. To your point earlier, and this is ironic when you think about the regulators. I mean, FTX had the inside track with Congress, and it was bizarre to us. I mean, we spent time with Sam, and we never could wrap our heads around it. Never saw anything bad, but it didn't really make a ton of sense. They were the ones that were going to be regulated, but they were also the ones that were operating offshore, right? Yeah. They were not a public company, and it turns out they just mismanaged all the funds. And so what's unfortunate is that is not crypto's fault. That is a fraud on top of crypto. You know what I mean? Yeah. And so there's an irony in all of this that I think gets lost. I think the more difficult part for crypto was actually the follow-on from that, which is, for a variety of reasons, some of which are political, some of which are human nature, all of those senators and Congress people who were pro-crypto and had taken donations from FTX went into their hole and basically let some relatively, I guess I can say extreme portions of the Democrat Party run a campaign against crypto without any legislative framework to do that either. And that's why you had the courts get involved. So you had this really wild period of 3 years where it was just very difficult to go through your daily life as a company that was operating the right way. I want to be clear about what you said about terrorist financing. For sure, there are parts of quote unquote crypto where that stuff happens, whether it's privacy coins or otherwise. Like, our job as a crypto company is not to defend crypto. Crypto is a technology. People will use a technology. People will use dollars, whatever. So that's not our job. But I also want to be clear that is a very, very, very small, and every study I've ever seen is a lower percentage than with US dollars in terms of illicit uses. And there are a lot of those that are out there that have been done very thoughtfully. And secondly, for the big cryptos that really matter, like Bitcoin, if you're a criminal that uses Bitcoin, you are a dumb criminal. Like, this is like an immutable database that timestamps what
that's right. That's the whole thing.
That's such a good point. Yeah.
That is not a smart way to be a criminal. So I think what we're dealing with is, it comes back to the generational point. It comes back to a little bit of the philosophy around government. Is our job to control everything or not? And I think crypto is something that is viewed skeptically and is scary to politicians of a certain ilk, because if we can't control it, then it must be bad.
Yeah. Or if we don't understand it.
And they don't understand it. That's the same thing with what happened with Lehman. It's the same thing.
100%.
Politicians have no idea what any of this stuff is. It's just stuff they don't understand. So it's scary and it's
bad. It must be bad.
And so then where the crypto community did a bad job is crypto advocacy in DC was so fragmented. You had some people wanting a stable coin. You had some people wanting to go public in the US. You had some people wanted to be a broker dealer. You had some people who wanted market structure legislation. You had some people who wanted retail stuff. And to be fair to the politicians, they're like, their heads spinning. What should have been told was the story that we're now telling, which is the capital markets dominance of the U.S. is important. Stable coins are important. Like, we're not saying every part of crypto should just be a free open market. We're saying that there should be thoughtful regulation to the extent that existing rules are not analogous or applicable to crypto. We should have a mechanism for dealing with that. There should be rules of the road. To the extent there are new technologies like DeFi where we don't know how they're going to play out, there are ways to build a sandbox around that and to make sure that you address things like on-chain AML KYC, which addresses broadly the terrorist financing. And oh, by the way, even if you do none of that, terrorists can go do whatever they want. Like, they can speak on Signal, the messaging app. They can send, shit coins to each other if they want to. Like, whether there's U.S. regulations or not, they're going to do that. What we should do is we should set standards and norms around the good stuff. And then that will further isolate the bad actors. And ultimately, they will be able to be sort of ring fenced in their own way. And so I think there's been a lot of false narratives that have been put out there at different points in time for different reasons. And I think that that's all going to look, to your point earlier, so different in 2 years. Like, you're going to look at it and be like, wow, that was controversial. Like,
Steve, I loved your answer to that question. It's funny. We put up a silly reel on social media today, and you still see people reacting to saying all investment bankers are parasites. They are the bad guys. They made everyone lose everything in 2008. People so heavily over-index on things when they break, right? FTX actually was not a household name as much as everyone likes to act like it was. I'm sorry, it was not a household name before it blew up, right? But it became a household name when it blew up. And I think that that's...
And by the way, most people have no idea what actually happened with it. And the only reason that Jen and I have any idea is we read freaking Michael Lewis's book, Going Infinite. So, like...
And by the way, I read the book and I'm like,
and I still didn't really
like he did anything that bad.
By the way, hold on. Hold on. Okay, so the book was meant to be a puff piece that became a crime piece, right? So that was, and like, okay, the other thing I will say is that we're still running this mandate, so I'm not going to talk in too much detail, but we at Galaxy, like, part of our mission, why we should exist, we led the wind down of the crypto holdings of FTX under a bankruptcy code. So I know way too much about all of this.
I'm sure.
Ooh, we got to talk offline. I got to feel it's a missing piece. No, I'm just joking.
Well, no, I mean, it's on some level, it's just stupidity. And it's just arrogance, and it's moving too fast. There's a legitimate debate about intent around FTX. And as it happens, as things get worse, people get backed further and further into a corner and make worse and worse decisions if they're not thinking clearly or operating properly. I think one of the components that was certainly a part of FTX was the lack of a formal banking system for crypto. And so I totally understand how early days Alameda accounts would be used for FTX because, it was very hard to get bank accounts. And, we were able to get bank accounts throughout our life because of who we are and our relationships. But if you didn't have that, I could see how you're building a company, okay, like, just use that bank account. And then,
and if there's no adult in the room to tell you, like, hey, this isn't exactly what you should do because of these risks, right? It's just like, what does it matter? I accidentally paid my landscaper $248 off our business credit card. And I literally wrote Kristen a note and I was like, I'm formally recognizing here that I accidentally clicked the wrong credit card and I will make a matching capital contribution.
Accidentally, then, huh? Accidentally, yeah.
It was the $248 that sunk the Wall Street skinny.
Listen, I'm not, I don't want to be flippant. Like, I'm not saying that what happened at FTX was okay. I'm not.
No, I mean, because you saw that with, like, again, just, it was a pattern with him. It was like he always thought he was the smartest in the room. There's an 80% chance that the money is going to show up. Like, it was a flippant, and especially when you're running that much money, like, and there's that much money, and it's customers' money.
To agree, but and on a personal basis, like, I last saw Sam a month and a half before this, and we asked sort of, it was a tough time for the market, right? It was 2022, so this was maybe August, September, and just, how much water is flowing through the pipes, like, and his answer was, oh, everything's great. And like that didn't make any sense, and I guess when you say that to crypto people, they just, okay, but if you're a traditional finance person, you had the Luna blow up in May of 2022, the market had gone down and suddenly they're going gang. But, you didn't think it was fraud, but you're like, oh, what are we missing? Like,
just like you told that story about Joe Gregory putting his arm around you and telling you to put your entire bonus into Lehman stock. Again, no, that wasn't, like you said, there was no malicious intent. right?
But I didn't do it. I went back to my desk and I almost did it because it would be great to triple your money. But I sat there and I thought, like, if he's right, it's not going to really matter because I still work at Lehman Brothers and I'll have another bonus. If he's wrong, this might be my only bonus, and I just gave it away.
Set it on fire.
Yeah. So like, it's a good lesson. I think you're supposed to have, I don't want to say heroes anymore because heroes these days is a hard one, but you're supposed to have sort of mentors and people you look up to, but you're also supposed to think for yourself really hard when someone tells you to put your money somewhere with certainty, especially if they don't know you. Like, just go sit down and have a beer and think, how am I going to feel about this?
Yeah.
So anyway.
I will say, unrelated to anything, but we have kind of been learning about crypto over the last 18 months. Yeah. And I was talking to Jen about the fact that, like, I didn't understand anything about sales and trading until Industry came out. And now we're like watching the TV show and it's like a veil has been lifted. And I'm like, oh, I understand like what these trades mean and everything. There should be an HBO show about, like, I don't know if it's Galaxy, but like basically like about crypto. And then it will make so much more sense because it's this black box. And I feel like it's just like people just need to like see what it is. And like, it's like, okay, it makes sense.
We've joked about who's going to write the Galaxy book.
Call Michael Lewis.
Yes.
After his SBF performance, I grew up with his books like you guys did. But I can't do that. Like, I don't think he did justice to the FTX situation with this book.
Really?
As in he went too easy on them?
Too easy. Yeah.
I finished that book and I was like, again, struggling to be like, okay, but like, I know it was fraud, but like, it doesn't seem like that bad of a fraud. Like, that's honestly what I came away with. I was so sympathetic. And I will never forget that line about how he hired a dog that was trained to kill on command, but it was trained in German and it only understood German commands. And Sam Bankman-Fried didn't speak German. So he was so afraid he was going to like sneeze and like authorize his own demise. But I totally hear you on that being too sympathetic a portrayal. I will say, though, on the flip side, the human element of the story, I want to know more about crypto, Steve, now because I like you and I like your story. Like, I really do. No, and I'm dead serious. Like, now I'm like, oh, I want to like get into crypto.
Crypto's cool, but it's not bad. Like I mean, look, I think for everyone who's listening, if you don't know about crypto, don't start with what it all is. Start with the things that are very like easy to like. Bitcoin is something you should learn about. Ethereum is something you should learn about. Solana is something you should learn about. Stable coins are something you should learn about. Like, just start with the basics, right? Like, it's not the sexy stuff that's going to lead crypto to the promised land. It's literally going to be the financial rails. It's going to be digital identity. There's some AI crypto integrations that are pretty cool. Like, but I think trying to go like, what are the 2000 tokens all about? Like, just think of it like how many websites on the internet were dumb? Like 99% of them. Yeah, like
and still are dumb. Like,
although I will say, I heard this one person, they were joking. They were like, if AI takes over the world, they're coming for your crypto first.
No. AIs are now creating meme coins right now. Like that's happening.
Fun.
Like, AI agents are actually going to transact with each other in crypto because why wouldn't they?
Why wouldn't they? No, it totally makes sense. Okay,
right.
I can't wait for this terrifying Terminator apocalypse. Okay, a couple more questions because I know we're running short on time.
Yeah.
When I think about kind of the crypto universe, I've always thought about like the true believers out there and then kind of the indifferent crypto people who are just like, this is a thing, this is a widget. And you seem to be more on the widget side than the true believer. I'm curious, is that an accurate representation or like, what do you see?
I understand why it comes across that way. I am between the two, which true believers would say makes you a widget person, but which is fine. And some of the widget people think I'm a true believer. It's like, it's okay. I genuinely think that the financial system can be better, and it's better for everyone if some of these things happen. I genuinely do. The real question, when you say true believer, right? Like, true believers exist in different tribes in the crypto community. A true believer in Bitcoin is different than a true believer in Ethereum, is very different than a true believer in everything should be off the grid and privacy coins should be the way, and like self-storage is the only way to store your keys, not your keys, not your crypto. Like, so do I take it that far? No. Is there a libertarian aspect of crypto? Yeah, there can be. But like, there's also like, to your point of financial inclusion, like if you have an Android phone, which is very inexpensive in Africa, since we were talking about Africa, crypto is open source. Like, you can fractionally own Bitcoin or a stable coin, and you can transact in US dollars in increments of pennies. Like you have a bank.
Yeah.
Billions of people have been debanked.
Yeah.
And everyone's so worried about equality, and I'm not dismissing it. It's a big issue in the US. It is a bigger issue to not have a bank for a billion plus people.
Yes.
Yes.
Fact. You know, and no one can stop these people from having access to dollars, US dollars, in countries where their currencies have been lit on fire. And by the way, it's not like the US government's doing great. You know, like we're paying more on interest payments than our national
Steve,
debt.
because like I honestly think my key takeaway from this is that increasing crypto adoption through stable coins is actually something that increases the dollar's strength as the reserve currency of the world, not undermines it.
It does. You're totally right. So the US dollar dominance and stable coins are closely linked to each other. And so so that's on the one hand. What I'm saying is away from stable coins that are backed by dollars for EM countries or places in the world where there's hyperinflation. The dollar is still by far the standard and the dominance is there, and having access to dollars is meaningful. In the US, where, you know, it took 200 plus years to get 12 trillion of debt, and then in like the last 5 years we had another 12 trillion or something stupid like that. Like I don't know, like I do want to own a little Bitcoin, and that is the same reason I want to own gold, not because I love our country. I love, you know, sound like Trump, I love the dollar, I love our country.
No.
From that perspective, Bitcoin is important in a portfolio context. And so I don't think it's one broad brush for all of crypto, I guess is what I'm saying. If you're literally coming out of college, you have to think about the setup. And we haven't even really rationalized the global financial crisis. We kind of started to do with our inflation, but like it's not like we've fixed the core issues. Like moral hazard exists. Like what's going to happen with, you tell me, Jen, like what's going to happen if we have another crisis?
I don't know, but I mean, you look at the pace and length of the cycles. Think about the GFC and think about the buildup and the unwind, right? Yeah. You talked about it. It wasn't just one day. It was the rounds of layoffs, and then it was the bottom, but then it was the bottom after the bottom, right? And it took so long. And now it's like these cycles happen in a weekend. You're like, okay, everything's like collapsing. Well, the Fed will ease, whatever, we'll be fine. They'll start. Okay, we're back. We're fine, right?
And you're right. And to that point, probably what's going to have to happen in the U.S., right? Because we politically can't get to rational solutions on anything if we never knows. No. But the bond market exists, and so remember what happened with the U.K. There was a rate spike that freaked them out because they were trying to do something on the fiscal side that the market hated. And
I think it was like cutting the top tax rates or something.
Yeah, but that's going to happen.
Sorry, we'll have to be more specific about our UK crises.
The rolling crises. But in the U.S., at some point, we're going to wake up, and maybe it's in 5 years or 3 years or 1, I don't know. But like the bond market is going to force the government's hand, and then you're going to have everyone running around like chickens with their heads cut off, and suddenly the retirement age is going to go up 4 years, you know, and Social Security is going to be like, there's no other way to have.
It is like, it is wild that it hasn't gone up already, just because.
But that's my point. It's going to be like fine, and then it's going to be not fine.
It's only all at once.
Well, it's like there's like 8 years left of Social Security. I mean, there's none left for us. Like we're screwed.
No one. If anyone in our generation is counting on Social Security, terrible news.
$1 billion of debt every 90 days, guys. Like it's just not. It's just not workable. And I just don't understand how neither political candidate feels they should or have to talk about it. It's crazy.
No. Yeah.
It's crazy.
No, it's insane. Yeah.
Yeah. I will say it's something that, like, as someone who thinks in bond market terms and not in equity market terms, it's one of these things that after I've been talking about the bond market in some capacity or another for 20 years, how long have we been having this conversation? Like, then the stakes seem to get higher and higher and higher, but nothing happens.
Nothing happens.
And so
everyone concludes it's okay, but gravity exists, and that's
exactly.
What the bond markets have always taught us, that gravity exists. Like, and maybe we can float around in the atmosphere for a while, but at the end of the day, you know, at some point it's going to happen. So it comes back to like why I went into crypto and out of tech. Like, I just think the legacy system is not going to look the way that it looks in 10 years, and I think you know, if you're starting your career, you need to, if you don't agree, that's cool, but know why you don't agree. If you do agree, don't put your head in the sand. Like, spend your time doing something that builds a knowledge base around that. You don't have to go all in or do any of the things that someone like me did, but you may want to consider a job that has some adjacency to that stuff, just to give yourself some options.
Yeah, totally. I wanted to ask one personal question, just because I know we're getting short on time, but we ask most women who we know who have young kids, we ask them how they basically make it work being incredibly successful with kids. And as we were talking earlier, you guys have a couple of young kids and you're both badasses. So how do you make it work? And just, I guess, any tips for people who are very motivated, want to be successful, want to have a family, anything that you would advise, or how do you guys make it work?
Oh man. Yeah. I mean, I feel like the answer classically has been some version of like work comes first, but that's not true for us. But that also doesn't mean like, remember the Starbucks CEO, he's like, don't bother me after 6 p.m. because like he's off the grid.
Oh
like,
yeah. I remember that little scandal.
There's something about crypto being 24/7 that's a positive, at least for me. And I'll talk about my wife in a second. Like I work all the time, but I tuck my kids into bed. I get them ready for school every morning. Now, when I have to travel, you have to travel, but somewhere between Zoom as a tool in the toolkit and crypto being 24/7, we work later in the evenings. I try to travel very in a targeted way and in a thoughtful way. And my wife does the same. So there's a lot of logistics conversations. She travels. It's really the travel more than the day to day.
Yeah.
Because when you're gone, the best you can do is like, they're called lovey loops. My wife saw it in a Daniel the Tiger book. You literally write like once a day, you have a lovey loop that you give to the kids, and then they feel like
I don't know what that is, and I want that now. Okay, we need to research lovey loops.
So there's little things like that, but I think we have been able to manage the travel calendar well, and it's pretty non-negotiable that and it's so funny because I think back to 15 years ago, people were out every night. Like I'm probably not out more than a night a week or two nights.
Okay, no, literally someone asked me if I wanted to meet for dinner last night at 7 p.m. I was like, on a school night in this economy? Like, what are you talking about? I'm in bed by 8:15. Like, no, absolutely not.
I don't think it's that complicated. Like I really love being a dad, and my wife loves being a mom. And when it's important, we put work first, but like, you have to be honest with yourself about when it's actually important. And it doesn't mean the work doesn't get done. The work gets done. It just gets done after the kids go to bed or whatever. And so you need to have a good partnership. And I actually feel like because she has a busy job and because she's, flying around the world and talking to institutional investors and all that, like it sort of there's no fallback. You have to actively manage your life, and it's a day-to-day thing. It's kind of like you wake up and you look at your work schedule, and then you wake up and you look at your personal schedule, and you can't just sort of like turn off on one and turn on the other. Like they're both constants.
They're both on the same calendar right next to each other. That's such a good way of thinking 100%. Of it. Right? Yeah.
My wife is awesome. She's never wanted to be a stay-at-home mom. I knew that going in. Like we met through work. And so I think, the idea that I would just go do my thing and she would handle it was not on the table. I didn't want it to be on the table. My mom's a doctor and my dad worked as well. And so it's always been a thing to have working parents. We both love working. So.
Love it.
Okay, that was one of the best answers I've ever heard from a dad. Okay, and then last question. So you told some great stories early on about your insane recruiting journey and how you approached entering into the industry. And we talked about young people coming up. And I know you're not in charge of recruiting at Galaxy, but I do think that the approach to bringing on new people does start from the top down.
Yeah.
How have you applied your philosophy towards what makes people stand out and what makes them successful to the recruiting process at Galaxy and like the people and the skills and the talents that you value most in young people coming into the industry?
I actually think it's not different from my philosophy before coming into crypto. Like it's funny. I literally just before this responded to someone who reached out to me in early September. And I don't know why I remember, but it was someone who had a very interesting experience and I had completely forgotten about it in my email box. And I saw something that reminded me of that. And I emailed the guy back and I'm talking to him next week and he's asking about an internship. And so I would advocate sending one really good thing that catches someone's eyes versus 100 emails that are emails are like standard. So standing out has always been the way to do it. And I value that because that's also the thing that's going to help you. We could hire 100 people that could do the job. It's who's going to be the person who's a little bit special or differentiated or makes clients want to talk to them or, that is like 95% of the trick. Like, don't sit there and expect people to just notice you and be mad when they don't. Like, it's not their fault, like that's your job. Your job is to make sure that you stand out a little bit. And so keeping an eye out for that is number one. I'm very focused on and disappointed in the participation of females generally in crypto, meaning I don't mean it's females' fault. I mean, we need a better job of bringing more balance to that. So I'm really focused on that going forward. It's very similar to technology where there's a male bias on the developer side. And of course, finance, we've talked about this a lot. You guys know about this. You put those two together, which is crypto, and you have a need to really be focused on it. So I think you have to be proactive in certain areas, and then I think you have to be keeping an eye out for the thing that's just a little bit different. And I guess in today's world, I don't know what the substitute is for having an article written about TerraCycle, because that's kind of a random thing that just happened. But I do think being interesting and I think you can connect with anyone these days. Like, you can get to somebody that, like, whether people reply to your LinkedIn message or your Twitter DM, like, they see it, they just do. So just make sure I've never online dated, but like, make sure you say the first thing that's interesting, I assume that the way you approach online dating, you wouldn't want to just say like,
I assume, no, just kidding.
It's standing out from the crowd early on and not holding back and not worrying about how it's perceived, and like, just be yourself. Like, honestly, that's the main thing.
I love it. This is one of my favorite all-time conversations. Steve, thank you so much. It's been an absolute honor and a privilege getting to talk to you. Congratulations on all of your success. Hopefully this is the first conversation of many. And please tell Fiona that, like, not to be mad, but like, basically this episode is like a worship of her. So
amazing. Yeah, I agree. I will tell her. Thank you, guys.
Awesome. Have a great rest of the afternoon.
Bye.
Bye.